Okay, welcome back. You're watching India Market Close, and in the wake of auto companies coming out with their third quarter numbers, it's been a mixed bag. In fact, my colleague Puneet has drawn up a comparison chart between the big three PV manufacturers. You have Maruti, Tata Motors, Hyundai. Puneet, over to you.
Well, thanks for that. So, when the two-wheeler numbers came in, we saw that, it could be a resurrection of the auto sector finally because, strong numbers from all three, two-wheeler makers. And then came the passenger vehicle makers, dominated the industry with all kind of negative news. And, that's reflected in the table that's right in front of you. While Maruti has, missed EBITDA margins slightly, you can see that stark difference across all metrics for something like a Maruti Suzuki. So when you compare it with Tata Motors and Hyundai in terms of revenue, it's outperformed up 13%. While, on volumes as well, the company has done pretty well in this particular quarter. That's, of course, led by the Diwali sales. But we are seeing that kind of impact of, portfolio gaps, so as to say, for Hyundai Motor Corp. While for, Tata Motors, it has been a dull 9 months and outlook and pressure on the quarter four. As, we spoke about this morning across JLR and the PV makers to maintain the FY25 guidance continues. You can look at the margin growth as well, and that's one of the starkest difference between all these passenger vehicle makers. Maruti at roughly 14%. Tata Motors mentioned it has some pressure from JLR in terms of warranty cost in the US and the UK. But the Hyundai margins were down because of a very puzzling reason, because they've entered Africa now in a bigger way because Middle East growth in the export market has slowed down, and they're giving more discounts in Africa because they're competing there with likes of Maruti Suzuki as well as the local players. And hence, that kind of difference on change in strategy, change in execution has impacted numbers severely. On profit growth as well, 12% for something like a Maruti Suzuki. Tata Motors, we spoke about it, 22% down in this particular quarter because of lack of revenue growth. And for Hyundai as well, that 18% sharp this thing, and they had a discounting strategy of roughly around 381 crores is what they mentioned was lost in terms of profit before tax, in terms of discounting, and hence that stark difference is visible. And we're seeing, brokerages upgrade Maruti today, while they've cut target prices of something like a Tata Motors today, and a couple of days ago, similar fate for Hyundai. So overall, it's a big beat for Maruti Suzuki. And quarter four, they mentioned Maruti that they expect a 3.5% retail growth, similar to Q3. So, and I think, the market will reward that kind of number right now.
Okay. Sudeep, how do you read into some of these numbers? Maruti far outperforming peers.
Absolutely. I think, it comes very starkly clear that if you have portfolio gaps, you cannot fight in a market which is now evolving and maturing. So that's very clear between Tata Motors, Hyundai, and Maruti. Maruti the portfolio is absolutely tailored towards a market like India. And that's why they're reaping the reward. Also in export market, they have been well entrenched. And other players like Hyundai, who is now trying to enter Africa and all that, obviously needs to, use tools like heavy discounting to gain market share and establish themselves, which is getting reflected in their, the numbers, profit numbers, which is suffering because of these discounts. So undoubtedly, Maruti continues to maintain their leadership in the industry by a wide margin. Even as far as performance is concerned, they're the leaders once again.
Interesting. Kush, I want to also take a quick technical check with regard to Maruti. It's been an outperformer with regard to fundamentals, about what are charts looking like. Before I take, of course, your and Rajesh both's view on Tata Motors.
Well, we did see some sort of a recovery, on Maruti, but for the last 10 odd sessions, it's been resisting near that 200-day moving average. You're seeing some negative RSI divergences pop up. I think Maruti also is perhaps waiting for the budget to get out of the way, to see just if there are any any benefits that come about. But other than that, I think one should just wait and watch and see a very clear candle emerge and close above the 200-day moving average. It's not too far. 12,100 is thereabouts the level. Once you get a clear close above that is when you should perhaps consider going long. Otherwise, there's a possibility that we saw last couple of times. The stock does resist at a level after a bit of a recovery and then gives way again. So I would actually wait and watch to see, as in when it closes above the 12,100 mark, then there is a very clear run, and that's when you should consider a fresh long position. If you have an existing position, not an issue at all, because on the downside as well, 11,800 is a good base. So that is where you place the stop loss.
And Rajesh, Tata Motors, what do you make of that?
A series of low top, lower bottom formation in Tata Motor that clearly suggests that the trend is down on the near term as well as on the short term chart. Looking at the breakdown today, stock now slipped below to 700 level. So I think if it continues to remain below 700, there is a possibility that we may see furthermore down move towards us 660 to 640 kind of zone also. So trend is still on the weaker side. This is the sixth consecutive month where stock is making lower high low formation. That clearly shows that sustained supply pressure is there in the stock. So I think those who are already short in the stock can hold their position with the stop loss of 720. Possible down move can extend to 670 to 660 zone.
Okay. Kush, your view with regard to Tata Motors?
Slightly contrarian, Harsh, on this one. Because we're seeing positive divergences on the multiple time frames, daily and weekly. Plus, if you see the Fibonacci series, there is the pinpoint 61.8% retracement from the early 2023 lows, and we've typically seen stock rebound from those levels. So while I won't go and bet the house on this, but if I have a view of 12, perhaps 18 months or slightly longer, around those levels or around that time frame, I would say this is a good time to start accumulating. V-shaped recovery, perhaps not on the cards, but definitely good levels to start your accumulations at.
Okay, Sudeep, I'm going to quickly ask you a question with regard to Bajaj Finance.